The markets were uncommonly calm today. In fact, the so-called fear gauge known as the VIX slid today to its lowest level in nearly a quarter century. So we asked Bob Pisani to take a look at whether risks to the market have really lessened. Here's his report.
Is the stock market priced for perfection? Well, it sure is, but the data points are just about as close to perfect as you could ask for. First, with the French election over, geopolitical risk is much lower. Second, earnings are above expectations for both Europe and the U.S., and full-year guidance has been strong. Third, the U.S. economy appears to be improving. With April's strong jobs report, it's looking likely that the first quarter's weak numbers are just an anomaly, and the Fed is looking pretty prescient. They call that first quarter data transitory. Fourth, the Federal Reserve is essentially out of the picture right now. Traders are expecting 2 rate hikes, and nothing's happened recently that's really changed that view. The economic data is good, but it's not too good. And finally, tax cuts are now in play. This is a pretty rare confluence of events. Lower risk right across the board. It's not surprising that world markets are at new highs, with Germany and the U.S. at historic highs, France and Japan's better than 12-month highs. So is the U.S. market expensive? Yes, it is by historic standards, but not dramatically so. So why aren't traders more excited about all these new highs? Partly it's because the highs have come on low volume and low volatility. But that's not surprising either. Prices are too high to make buyers enthusiastic, but sellers are not enthusiastic either because everyone believes that a modest drop in the market will only be met with more buying. Why sell? So the bottom line, for the moment, the market is essentially saying, don't worry, be happy. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.